Our next segment is called Wrap the Week. This is our exercise every Friday to sort of take a look at what has happened over the last 5 days, but then try to put it in a broader context. We try to do that every day, but Friday especially, it's a good time to sort of take a step back, take stock of where we've been and where we're headed to. Interestingly, we asked a poll question of all of you on screen. And I wanted to share just with you some of the results before we get into some of the charts and what they're saying. We asked you in the next year or so, do you think the stock market will go up or down? We had over 700 respondents, and thanks all so much for responding. 3 out of 4 of you said up. You think the market's going to go up this year, finish the 2020 in a higher position than it is now, and 24%, only 1/4 of you said it was going to be down. That's interesting, and it lines up a little bit with the AAII rankings, which we're going to talk about later in the show when we get to the mailbag segment. But what's compelling is the fact that 3 out of 4 of you are pretty bulled up, are pretty positive, at least that we're going to be stronger than where we are today. Let's look at some of the charts and see if we can, I don't necessarily want to change your mind, but let's look at some of the evidence and see what we might be able to draw from that. I like to start with the Mindful Investor chart list. This is a chart list that I maintain. It's part of my weekly exercise to go through these charts. If you're not familiar with this, you can get to it. Just email me at thefinalbar@stockcharts.com. I'll send you a link to this list, and then you can click on Save to Chart List, put it in your own log, and you can follow some of these going forward. So in terms of putting the weekly action into perspective, I love to start with the long-term picture of the S&P 500. This is a 5-year weekly view of the S&P. This is using one of the trend-following systems that I've used for a number of years. It's using the 21 and 34-week exponential moving averages. It's a very long-term exponential moving average combination. It's designed to just give you the overall long-term secular trend, and you can see this is clearly in a position of strength, both of those sloping upwards. This is the PPO, so showing you the difference between those two, and you can see overall, as long as this is above 0, it tells you the trend is positive, and that's what we've seen. I also look at a shorter term indication. This is more of a tactical read. This is using the PPO on a shorter time frame, similar to MACD, if you're familiar with that indicator, the weekly MACD. And again, when this crosses up through the signal line, that tells you that the short-term trend is up. So here we have a long-term bullish trend, a short-term bullish trend, really indicating the strength that we've seen from stocks over recent weeks. This is looking at breadth using the S&P 500, the NYSE, also mid caps and small caps. So what I'm seeing here is the fact that the S&P's gone higher. The breadth is at new highs again this week, which makes sense, sort of following through on the strength of the large mega cap trade. But if you just glance down through these 4 lines, look at how you get smaller companies lower in the cap tier, and you can see how these breadth lines are starting to turn down. So the small cap breadth line actually lower over the last 2 weeks, while the S&P is actually closing to new highs. So it shows you that the broadest, largest companies, the large cap S&P names, doing very, very well. But if you get smaller in the cap tier spectrum, the smaller, more speculative companies, those are actually on average rotating a little bit lower. So again, maybe one red flag among others to keep in mind here. Here we're looking at new highs and new lows, and I just show you that. And again, this is not updated for today's trading yet, so it might be a little different based on the sell-off, the bearish engulfing pattern on the S&P that we mentioned earlier. But up until today, you can see every day this week until Friday, we've had more and more new highs on S&P names. So, yesterday you had 81 out of the 500 companies going to new 52-week highs, new 52-week closing highs. So it'd be interesting to see if we had a big change in that. I wouldn't imagine, probably less stocks, but not a huge negative signal by any mean. Here we're looking at breadth in the form of the percent of stocks above the 200-day and above the 50-day moving averages. And I would just point out, again, the fact that so many S&P names are above their 200-day. It's almost 84% now, just above 83%. That is an extreme high for that reading. And it lines up very well with previous extended markets. Even if the primary trend remained positive, it was sort of a corrective period. I think any strategist you'd talk to would say we're very much overdue for some sort of pullback, some sort of way to digest the gains that we've experienced. Maybe this is an indication that we're near that point where that would happen. We have not seen it yet. Here we're looking at the consumer discretionary versus consumer staples. As we saw, staples outperform consumer discretionary today, which is why this ratio is kind of coming down a little bit. But overall, we've had this rotation, and that uptrend in that ratio is not in question at this point, I think, yet, because we haven't pulled back enough to where you'd think that's alleviated. So overall, we're seeing a broader rotation into consumer discretionary. If this ratio turns lower, I think that would be very telling you that people are taking profits on some of those high-flying consumer names they may have been up until now. And this might be one of the places where that's reflected. This is the equal-weighted consumer discretionary versus consumer staples. You can see that that's relatively flat. I wanted to switch gears now and go to our scooter rankings. This is one of the places where I like to think about movements and rotations. I did want to do the 1 week changes. We're going to look at industries. This is one of the places I like to focus on what's happening and what's evolving. I would note the strongest industries out there, a lot of technology. So you have computer hardware, you have semiconductors, but you also, and internet, but you also have a lot of other sectors. This is in consumer discretionary. You have the automobiles index, things like Tesla are incorporated into things like that. Specialty finance, and again, on the financial chart, the XLF has looked weaker than something like technology, maybe even healthcare, because it's pulled back a little bit, but specialty finance in particular has done really, really well. It's one of the strongest. Again, this is sorted by the industries with the strongest scooter rankings on an absolute basis right now. Let's look at what's moved. And so what you do is you resort the whole table, put it on 1 week, sort it on change, and this will show you which industries have moved the most. Really interesting to see that as of now, tobacco was one of the biggest gainers. This is a quick snapshot of the tobacco index. You can see how it's rotated from a negative phase in August, September into October, and then just being in a really bullish phase. It's been sort of a slow and steady gainer. Tobacco names are stocks that I feel like people love to hate. But if you look at this, it's tobacco, it's distillers and vintners. These are all, sort of consumer staple types of names. You then get into personal products and then biotech. The biotech trade is a really interesting one. This tends to be more of a risk-on type of bet. And when biotechs are doing pretty good, same as semiconductors, I think you have to feel pretty good about the broader market. It's definitely in a position of strength. And rounding out the top five, you have brewers, which overall had been relatively weak and still are. But you can see on the little preview that the price has started to emerge to the upside. In terms of the big losers this week, it's in materials, folks. So it's things like mining, it's gold mining index, and then going into clothing and accessories and some of the other energy and other related telecom industries. So we just touched on this. I'd encourage you to spend some time either tonight or over the weekend, look at the scooter reports by industry, sort this on some different ways, to get a good read on what has sort of evolved over time.